while we've touched on them a few times, we have not, in some of our previous sessions, we haven't really gotten to that section of the tax return where we talk about it. So on your Form 1040, what line are refundable credits reported on? On which line do we report refundable credits?
17.
That's right, on 17. That's right. And what is 17A?
As BC instructions.
Yeah, that's right. EIC, earned income credit. That's right. Yeah, that's right. And EIC is the first one that we're going to look at here. All right. So what I'm going to do is I'm going to be pushing out to you guys. Let me get this up so I can do it. I'm going to push out to you guys something I want you to download and then print if you can, because we're going to work off this today. So and it's at what I call an EIC shortcut. And it's not exactly a shortcut. It's just sort of all the rules put together into one little file. So it's out to you. Go ahead and download that. Those of you that can, print it, and that way you could make notes as we go through this today. Okay? And let me know when you get done with that. Thank you, Tammy. Okay, thank you, Noemi. Thanks, Garrett. Tina, is the computer there behaving? Are you able to print that out? Tina, I can't hear you. I cannot hear you if you just talk to me. You unmuted, but I don't hear you.
Can you hear me?
Yeah, I can now, yes. Okay, Tina, were you able to get that printed out? Okay. All right. So what you guys have printed out, I need to start sharing my screen so we can all look at the same thing. What you guys just had sent out to you is this right here. So I call this the Earned Income Credit Shortcut, or EIC shortcut, because it's got all the tests right there on one page. Now, I'm not going to go through numerous slides to teach this to you. We're going to work off this one page right here to teach you everything. Now, there's a lot of information here. All of this information is important. So on a page like this, you pretty much have to memorize what's here. You have to pretty much memorize what's here. There are some things you won't have to memorize on here, and I'll point them out to you when I get here. But the rules, or the steps, if you will, that's important to remember, because these are the rules to get EIC. So first of all, is earned income credit a refundable credit or non-refundable credit?
Refundable.
Okay. And what is a refundable credit? Somebody define refundable credit for me.
Something you can get a refund for?
Yeah, it'll reduce. It can bring down or reduce your tax liability if you have some tax liability still, and if there's any left over after your tax liability is down to zero, it can end up in a refund. Okay, so remember, non-refundable can only reduce your tax liability to 0, and then you're done. A refundable it does the same thing. It can reduce your tax liability, but once you get to 0, anything left over results in a refund. That's the difference. Okay. Now, EIC is a refundable credit. And actually, we've touched on some other refundable credits as we've talked about certain other credits before that were not refundable. But we'll touch on those again after we go through the EIC. Okay, so step 1. What's step 1? Somebody read me the first line of step 1.
Have to have earned income.
You have to have earned income. That's right. Earned income is why this exists. They want, the Congress, when they created this to encourage people to work, but they recognize working parents probably needed a little bit of extra help, especially if they were in certain the middle to lower income brackets. So they needed some help. Thus, they created earned income credit. Now you can see why you must have, for earned income credit, you have to have earned income. Without it, how much is without any earned income, are you going to get any earned income credit?
No.
You're right. No. Okay. What's the next thing? Amanda, can you read to me line 2 there?
Yeah, you have to have investment income of $3,500 or less.
Oh, wait a minute. I'm not step 2,
Oh.
line 2.
Oh,
That's
sorry,
okay.
sorry,
Step
sorry.
1, line 2. That's okay.
You must be a U.S. citizen or a resident alien all year on tax return.
There you go. So you must be a U.S. citizen. We already know what a U.S. citizen is. A resident alien means you can be an alien, but you've resided inside of the U.S. all year. Okay? So if you're a U.S. citizen or resident alien, do you still have to have earned income to be able to get this credit?
Yes.
Yeah.
You bet. You bet. If you're a non-resident alien filing a tax return with the United States, can you get this credit?
No.
No, because you're not a resident alien. Okay. All right. Garrett, can you read me line 3 of step 1?
You must not be a dependent of someone else.
Okay, good. Obviously, they're not going to let you take earned income credit as part of trying to get trying to get this credit if you're somebody else's dependent. Why do you think that is? Can somebody make a guess why they might not allow that?
Because the other person claiming you would be able to might be able to get earned income credit for you already.
That's right. It would be double dipping. You're right. Somebody, like for instance, Johnny is 19 years old. He is claimed on his parents' return. His parents, there's a good chance that they're getting earned income credit for Johnny. There's a darn good chance that they can get earned income credit for Johnny. And and so they're not going to let Johnny turn around and get earned income credit for himself too. Okay. Okay. So let's see. Tina, can you read line number 4 of step 1?
Everyone must have valid Social Security numbers by the due date of their return, including extensions.
Okay. So unlike some of the other non-refundable credits that we talked about before, this one you have to have a valid Social Security number, not just a valid tax identification number. In other words, a Social Security number is the only way to do this. You and everyone on that return must have Social Security numbers. If everyone on the return except you has Social Security numbers, so let's say you and your spouse, let's say your spouse and your kids all have Social Security numbers, but you have an ITIN, are you going to be able to claim this return, this credit?
Yeah.
If everyone,
Wait.
let me just repeat that. If everyone on the return except you has Social Security numbers and you have an ITIN number, are you going to be able to claim this credit?
No.
No. Why is that?
Everyone must have valid
Social
social
Security.
security.
Right. Specifically, in that example, you have an ITIN. You don't have a social security number. You have to, everyone has to have social security numbers. There are some non-refundable credits where all you have to have is either
Identification.
an identification number, either a social security number or ITIN or an ATIN. There are some that allow that, but this one specifically requires social security number, and you have to have it by the due date of the return. So if you know your client is going after getting a social security number and you're coming up against April 15th, that's the normal due date of the return, it might behoove you to go ahead and get an extension so that and then wait for them to get that social security number. That way, by the time they file the return, everyone will have social security numbers and they can claim this credit. Does that make sense? Why you might do it that way?
Yes.
Okay. All right. So, Noemi, can you read the next line for us?
No MFS.
Uh-oh. There it is again. No MFS. Does MFS keep coming back to haunt people? Yeah. Look, once again, you could have thousands of dollars worth of EIC, and if you choose to file MFS, then then you're going to not get this earned income credit. Okay, and Sheila, can you read the next one for us?
No foreign earned income exclusion.
Okay, so we've never talked about this, and we're not going to beyond this, but foreign earned income exclusion, what does that mean? That means that you or someone in the family there has earned, like you or your spouse, has earned foreign income, and for some reason it's able to be excluded. Now, I'm not going to get into the reasons why, but I'm going to give you one example where you might run into this. Every year I do some tax returns for people that are serving in a support role with the military. They're not in the military. They're serving in a support role. There's this one fellow I'm thinking of that he is an IT guy. He actually gets paid by his company who has a contract with the military, and he goes over to Afghanistan where he actually provides IT support over there. His is excluded. His income is excluded up to a certain amount, is excluded every year. So, would he qualify for earned income credit?
No.
No, he wouldn't. It's because he has this exclusion. It kind of makes sense, though. If they're going to take his earned income and exclude it, will they turn around and let him use that same earned income for a credit? That wouldn't make a lot of sense, would it? That would be double dipping. Okay? All right, so recapping, step one is to go through all of these little tests to make sure you qualify. You got to have earned income. You must be U.S. citizen or resident alien. You must not be a dependent of someone else. And everyone on your return must have valid Social Security numbers by the due date of the return. No MFS and no foreign earned income exclusion. So there are 6 things to memorize there. Do you guys think you can remember it? Okay, so I do want you to kind of rote memorize those. Those will help you in a testing situation. Incidentally, they'll also help you in real life if you knew those off the top of your head. Okay, so those are the ones that I want you to remember. Now, step 2 then is these are really some more rules, but step 1 has a list of just miscellaneous rules that you kind of just got to memorize. Step 2 says that your income, your investment income must be $3,500 or less, and those are the amounts for 2018. This can and normally does change from year to year. So your investment income must be $3,500 or less, $3,500 or less. So if you have investment income of $5,000, are you going to qualify for earned income credit?
No.
No. If you have investment income of less than $3,000, could you possibly qualify for earned income credit?
Yes.
Yes, sure. Okay. Now, what is included in investment income? This includes, first of all interest, 2A and 2B. What is 2A? Line 2A, what is that?
Tax exempt interest.
That's tax exempt interest. What is line 2B?
Taxable interest?
That's right, taxable interest. That's right. So what they're saying is it includes all interest, even tax exempt interest, okay? So when you're applying this investment income limit, you got to include all of your interest, whether it's taxable or not. That's what this is saying. Then you have ordinary dividends on 3B. Notice, I want you to notice these are not qualified dividends. Qualified dividends don't count. Okay?
Mm.
Now, going way back to early on sessions, what is different about qualified dividends than ordinary dividends? Can somebody reach back in their memory and tell me what is special about a qualified dividend as opposed to what we're looking at here, an ordinary dividend?
Qualified dividends have a lower rate, don't they?
Yeah, basically. Yeah, they are subject to the
capital gain rate? Yeah.
Yep, that's right. Ordinary dividends are subject to your regular income tax rate. Qualified dividends are subject to the special tax rates for assets and investments, things like that. Okay, so they're qualified dividends. So the reason they're excluding qualified dividends from these is because they're getting already a special tax treatment. Okay, and then capital gains. Capital gains also are subject to the capital gains tax rates, those special tax rates that qualified dividends are. So there is no nice way to remember all of this. You just have to remember what to include in investment income. Include all interest, whether it's taxable or not. Include only ordinary dividends. And then include capital gains. Okay, so all interest, ordinary dividends, capital gains. Let's all say that together. All interest.
All
Okay, everybody,
interest.
hold on a second. Everybody unmute. We're going to do this as a group here. We're going to drill this into you. Okay, first of all, first one with me. All interest.
All interest.
All interest.
Then ordinary dividends.
dividends.
Then capital
Gains.
Okay, let's do it again. What is included in investment income? First one, all interest,
Ordinary
dividends,
and
capital gains.
Okay, good. Now you just memorize those few things, and for 2018, if all of those things add up to more than 3,500, you're disqualified from earned income credit. Okay. So step one is a bunch of just miscellaneous rules we got to make sure we meet. Step two is making sure we meet the investment income rule. Okay. Now, step three is getting into specifics about whether or not you, after you qualify through step one and step two, see if you qualify to get earned income credit. So you've got to ask the question at this point, do you have a qualifying child for EIC? Okay, so if you do, then you got to meet these tests down here. First of all, what is a qualifying child for EIC? Well, it must meet the same dependency test for a qualifying child, both the general tests and qualifying child tests, except the support test. Okay, so let me explain that. Going back to how many times did I tell you when we went through, I remember when we went through my way of teaching you dependency. Do you remember that? So what were the general tests? What's the memory aid for the general tests? Does someone remember?
Dogs jumps creeks.
Dogs jump creeks. So I'm going to have you guys share that. So first of all, Noemi.
Yes.
D in dogs, what does that stand for?
Dependent taxpayer test.
Perfect. And was that Amanda that was talking a second ago?
Yeah.
I heard. Yeah, okay, that's what I thought. So Amanda, the J for jumps, what does that stand for?
Joint return test.
Yep, that's right. And then who else wants to take this one? Dogs jump creeks, the C in creeks, what does that stand for?
Citizen or resident test.
That's right. And what does that mean, Sheila? Just kind of give us the meaning of that
Well,
particular
you must
test.
be a U.S. citizen or resident of North America.
That's right. Perfect. Perfect. And notice that's not quite the same thing as the test that's up here for the EIC. EIC, you must be a U.S. citizen or resident alien of the U.S. So, okay. Now, so that takes care of your general tests. So you have to meet all the general tests, and then you have to meet the qualifying child tests. What is the memory aid for the qualifying child tests that I gave you?
RARS.
RARS. You got to think of a cat roaring or a big cat roaring. Rar. What does the first R stand for?
Relationship test.
Relationship test. Perfect. Sheila, since you answered that one, what is my definition of a relationship for this test?
Okay. Your child, sibling, descendant, or any variation of that.
That's right. Yeah. Let me clean that up. You have it right, but it's any variation of your child or your sibling or descendant therefrom. Perfect. What does the A stand for in RARS?
Age.
Age test.
Age test. What does the age test say?
Under 19.
Must be under the age of 19.
That's only part of it.
Full-time
all of it.
student under 24.
Or
Permanently and totally disabled.
perfect. That's it. That's it. Okay. And then what does the S stand for in RARS? Excuse me, I jumped over the R there, the second R. What does the second R stand for in RARS?
Residency test.
Residency test. Okay, someone pipe in and tell me, what does the residency test say?
It must reside with you for more than 6 months of the year.
That's right, more than half the year. That's exactly right. Yep. And then what does the S stand for in RARS?
Support test.
Support test.
Support test. And what does that support test say? Don't confuse, and remember, do not confuse.
Made more than half of their own support.
That's it. The dependent could not have provided more than half of his own support.
Own support.
That's right, his own support. That's different than the support test for qualifying relative. Now, so what we're saying is to have a qualifying child for EIC, you must have a qualifying child by definition, except the support test. In other words, this is what I want you to remember. This is easier to remember, I think. RARS without the S. RARS without the S. You must have a qualifying child by definition, RARS without the S. So if the child happened to provide, let's say he's a full-time college student and he worked enough during the summer that he actually is providing more than half of his own support, would he qualify as your dependent?
Yep.
No, if he provided more than half of his own support, would he qualify as your actual dependent?
No.
No, but would he qualify you still for the EIC?
Yes.
Yes, because it's RARS without the S is the thing. This is almost exactly this. It's a qualifying child test. He's got to be your qualifying child by definition, except if the only reason he's disqualified is because of that S, he's still going to meet the EIC requirement for you. Okay, RARS without the S. So you must have a qualifying child by definition, RARS without the S. That's if you can remember those two things, I think you'll keep it straight. Okay, and this is just another way to look at the same thing. Tests required are the general tests plus the relationship, age, and residency. Okay, so is it a requirement that that child be a dependent on your tax return? Is that one of the requirements for a qualifying child for EIC?
No.
No, it's not. It just happens to be they're the exact same tests except for the S. That's why I say you got to have a qualifying child, which by definition means for EIC is RARS without the S. Okay? Now this
But
one,
if you have a qualifying child on your tax return, is a qualifying child, they qualify for the earned income credit automatically.
well, if you meet the other requirements, yes, they would. Yeah, if they meet the other requirements. This is just saying, look, what I've done here is this is not how it's laid out by the IRS. I just have compared all the tests and seen that they directly correlate to this. So if you can just remember the qualifying child for definition of qualifying child for EIC is general tests and the qualifying child tests, and let me highlight this one, general tests plus the relationship, age, and residency tests. That's what it takes. So yeah, if you happen to also meet the RARS test, so this person's a dependent on your return, then you're good to go because you've met all the others. Now this is a little bit more. Remember the residency test for the child to be a dependent, that R right there, the second R, said they had to have lived with you for more than half the year. But for EIC, they have to lived with you in the US for more than half the year. So that's an important point to remember. They have to have lived with you for more than half the year inside of the US. Okay? All right. So, qualifying child. You've got, the question is do you have a qualifying child? How do you know that? Well, you got a qualifying child if they are a qualifying child by definition, except for the S. In other words, do you have a qualifying child for EIC, which means they meet all the general tests plus the relationship, age, and residency tests, RARS without the S. If they meet all or everything except the S in the qualifying child test, then they're going to qualify. And that child must have lived with you inside of the US for more than half the year. Okay? All right. So if that child lived with you in France for 9 months of the year, are you going to qualify for earned income credit?
No.
No. No. If the child lived with, say their dad is French, and the child lived with dad for 7 months of the year in France, are you going to qualify for earned income credit?
No.
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 What if the child lived with, let's say we have divorced and separated parents. The child, you're the custodial parent, so you are the custodial parent, okay? The child lived with you all the time except for when she was visiting dad. And dad it's his turn this year to claim her on his return. So you're not claiming her on your return. Can you claim earned income credit?
No.
No, because you don't have a qualifying child.
Okay. What are the tests? The answer is yes, you can.
Oh.
Yeah, that's okay. But let's go through the tests literally. Let's assume that in that situation they meet all the general tests, okay? We're going to go into the qualifying child test, the RARS without the S. Relationship, is she your daughter still?
Yes.
Is she underage? Well, I'm assuming, in that question, I assume she was underage.
Yes.
Residency, did she live with you? You're the custodial parent. Did she live with you for more than half the year?
Yes.
So can you, and support does not matter for the purpose of EIC. So can you claim her for earned income credit?
I guess so.
Yeah. That's why I was pointing out that you do not have to claim the child as a dependent on your return to take this credit. This is a big one, guys. In real life, this is a big, big one. Divorced and separated parents, the example I just gave you where dad is claiming the daughter, he's the non-custodial parent. You are the custodial parent. If you're the custodial parent and that child meets all of these tests to be your qualifying child for EIC, which is general test plus RARS without the S, if they meet all those requirements, then you get to claim that child for EIC, dad gets to take what? We've talked about this when we talked about some of the other credits. If dad's getting the dependency, dependence and claiming his daughter in this
He gets the
example.
child tax credit
Yeah, and?
and the additional child tax
That's
credit.
right. That's
All of
right. So dad gets to claim the child tax credit and additional child tax credit. Mom gets to claim what?
Earned income credit.
And
Earned
also
income credit.
child care expenses if there are any.
I'm sorry, say that again, Garrett.
Dependent and child care expenses, she can claim those also.
That's right. She can claim the child care expenses if there are any.
Yeah.
Okay, so as you can see, remember we said and we're talking about the child tax credit. Is that refundable or non-refundable?
Refundable.
Refundable.
No,
Oh, it is refundable. Sorry, my bad.
Again,
child tax credit. Is that non-refundable or refundable?
non-refundable.
It is non-refundable. Additional child tax credit, is that non-refundable or refundable?
Refundable.
There we go. Remember how I said child tax credit and additional child tax credit? That follows the child. That follows the child. Whoever claims the child on the return gets to take that credit. Remember we said that is one of the basic rules for child tax credit?
Yeah.
Yes.
Okay, so for EIC, it's not that way though. It's whoever meets these requirements can claim the earned income credit for that child. So that's going to always be the custodial parent. The non-custodial parent, the child did not live with them for more than half the year. I mean with the non-custodial parent. So the custodial parent meets these requirements for their children usually. And so even if they cannot claim the child on their tax return, just because the other parent gets to claim them, they still get to claim EIC. Guys, this is an important concept when you're doing tax returns and you have the non-custodial parent in front of you and said, oh, my ex-husband's claiming Jane this year, little Janie this year. You need to make sure that you do not take what credits with her. What credits do you make sure not to take on her return for Janie?
Okay, the child.
His return for the father? You said the father, right? Or the
No, her.
parent?
No, just her. She's got the child. You've got a non-custodial parent in front of you. I'm going to say her just to make it easier. So you've got this lady non-custodial parent in front of her. She is not claiming Janie this year on her return because her ex-husband gets to claim it. So what credits? So Tina, I think I heard you answering. I wasn't sure if it was you though. And what credits do you need to make sure that you do not take for the custodial parent in that situation?
You said we were dealing with a non-custodial parent. So you asked us about the custodial parent, so that doesn't
maybe okay, you may be right. Maybe I'm mixing up my words, so my apologies.
You said
Let me
we
start
had
over.
the non-custodial parent, a female with the daughter. What credits do we not take?
Let me start over. Okay.
Yeah,
I may have made a mistake, so I apologize if I did. Custodial parent. You have the custodial parent in front of you. Okay, that's what I meant to say. The custodial parent has Janie all year long, but non-custodial parent is going to take Janie on his return. So you're now with that information. What credits does the custodial parent sitting in front of you get to take? Which ones does she get to take?
Earned income credit.
That's right. Earned
and
income
if she has
credit.
any dependent care expenses for the child, she can take it also.
And dependent care expenses. That's exactly right. Which ones does her ex-husband, the non-custodial parent, get to take?
Child tax credit and additional.
Right.
Child tax credit. Yeah, if you
Right.
qualify.
So why did I spend all this time doing this? Because I wanted to make sure you understood that in a situation like this, the EIC still stays with whichever parent meets these requirements with the child. So just slowing down there for a second, I'd like kind of a thumbs up or thumbs down on this. Make sense? Tina, thumbs up?
Thumbs up.
Thumbs down? Okay, thumbs down. 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 Okay, Sheila?
Thumbs up.
Noemi?
I have a question.
Okay.
Where will you put the name of your dependent for the EIC?
You put it on the schedule EIC.
Okay.
Yeah, there's a schedule that you have to do for it where you list your dependents. That's where you do it.
Okay. Thank you. Thumbs
Yeah.
up.
Okay. And Amanda? Amanda, are you with us?
She's muted.
Yeah, no, she's either, but sometimes she types in her responses. So.
Okay.
And Tammy, thank you. I was just about to get to you, Tammy, but Tammy gave me a thumbs up. Look, I'm not sure what's going on with Amanda. Amanda, are you still with us? Can you either type or speak up for a second? Okay, she's good. Okay, so that's if you have a qualifying child. So step 3 is to determine if I have a qualifying child. Okay, that's what step 3 is about. Now, what if I don't have a qualifying child? Could I still possibly get EIC? Yes, and that's where you go to this line right there. If you have no qualifying child, your meaning you as the taxpayer, your age is at least 25 but less than 65. Okay, so you have to be between 25 and 65. You have to be at least 25 years old but under 65. Okay, and if you're married, filing jointly, only one of you have to meet that requirement. So if you have a married couple, no children, they're both 32 years old, are they going to qualify under this test? This part of the test, do they meet the test, the age test? Yeah, you guys are right. You're getting it right. Yes, they do. What if you have a married couple, married filing jointly, no children because they've all moved out of the house? One of them is 61 and the other one is 66. Do they qualify? Yes, they do, because it only takes one of them to qualify.
Yeah, either spouse.
Yeah, either spouse. It only takes one to qualify you. Okay, so step 3 is, do you have a qualifying for child for EIC? If you do, and you've met all this requirement, remember you had to have met all the requirements in step 1 and all the requirements in step 2, the investment income requirements, then you have to have either a qualifying child for EIC or you must be between 25 and 65 years old to qualify for EIC. You see how all this fits together? So you have to meet all the requirements in step 1 plus the investment income limits in step 2. Then you have to have either qualifying child for EIC, or if you don't have a qualifying child, you must be between 25 and 65 years old. So before I go on to step 4, any questions about that? Okay. So step 4 is really your limitations, your test, your earned income and your AGI tests. They both have to be figured separately. So you have to take your earned income and see if you max out. So for example, if I have earned income and no qualifying children, what's the maximum I can earn before I'm disqualified because of the amount of my income? What's the maximum I can earn?
15,270.
Okay, and to be technical, it's actually 15,269 because it has to be less than that amount.
Okay.
Yeah, but that's a technicality. And so if I have one qualifying child, what's my limit? And we'll just say a limit. What's my cutoff limit?
40,319.
Right. If 40,320 is my cutoff, 40,319 is the last dollar I could make and still qualify. You're right. So cutoff limits, you can see them right there for 1, 2, or 3 or more children. If I have 5 children, does this amount that I highlighted there change at all? If I have if I have 5 children, will this go up more?
No,
Yes.
it says 3+.
Yeah, 3 plus. No. Once you hit 3 or more children, this is it. You don't get any extra additional amounts. If you get more than, if you get $49,194, if you hit that amount, that's it. You're done with EIC for that year. And it doesn't matter if you have only, if you have 3 children or 5 children, it doesn't matter on that. Okay?
What is that add 5,680?
Right. Okay, sure. So up here on this first line, if you have no qualifying children, sorry, this is, I'm not highlighting this well. If you have no qualifying children, if you're filing MFJ, you get to add that additional amount to this amount over here. If you're MFJ, this is assuming single amounts.
Mm.
So, but if you have 1, 2, or 3, if you have any qualifying children, you get to add this amount. Okay. So if you're no qualifying children, you get to add $5,680 if you're filing MFJ. If you have, I said if you're single, that's not quite what I meant to say. If you have no qualifying children, this is your cutoff amount. And then if you have no qualifying children and you're filing MFJ, you get to add that amount in, the $5,680. Now, if you have any qualifying children, whether it's 1, 2, or 3 or more, you get to add this amount to the cutoff amount. Does that make sense? Now, do I want you to memorize these cutoff amounts? No, I don't want you to. I don't think you're going to need to. I don't think they're going to question you and expect you to remember these. I think they'll give you a certain amount of information in the problem. That's most likely. Cannot guarantee it, but I don't think they're going to probably require that you do that. Okay? All right. So are there any questions about how this works? When you take your earned income and then you got to look at whether you have any if you have no qualifying children, here's your cutoff amount. And if you're filing jointly, your cutoff amount is this plus this amount. And if you have 1 qualifying child, this is your cutoff amount. And if you're filing jointly, you want to add that amount to it. If you have 2 or more qualifying children, here's your cutoff amount, $45,802. If you're filing jointly, you add $5,690 to it. If you have 3 or more qualifying children, your cutoff amount is $49,194. And if you're filing jointly, add $5,690 to it.
So
Okay.
in some cases, with the way the tax code's written, in some places, head of household gets a better break than single, but not the same as married filing joint. I'm bringing that up because I'm asking if there's a difference with head of household in a situation like this or not.
No.
Because you've got
No.
single, essentially married
No,
filing separate. from
that's
married joint.
right. No, your question's well taken. That's why I said don't think of this as single. It's just if you're filing any other than MFJ, these are your amounts. If you're filing MFJ, you get to add an additional amount. So
That's
whether
the way I understood what you were saying. I just wanted to ask that.
yeah, no, it was a good question. Good question. So that's what's important. So this is what you do. You have to do the earned income test with this and use those amounts. Then you have to take the AGI because the AGI is adjusted gross income. You have to take your AGI and run these same tests to make sure that both earned income and AGI are less than this amount. Okay? So just make sure that both amounts are less. So you got to run it with your earned income, your actual earned income, and then your AGI amount. Okay? So what is earned income? What is earned income? Somebody define or give some examples of earned income.
Wages.
What's another type of earned income that you'd put on your return?
Self-employment income.
Self-employment income. Would income coming from investments in the stock market that you report on Schedule D, is that earned income?
Yes.
No.
No,
The capital gains you have would be earned income.
no. Capital gains are passive income, not earned income.
Okay.
See what I mean? See the distinction?
That goes to
Earned
API, but not to earned income. Yeah.
Right, but that's okay. But let's come back to step one, that first rule. You must have earned income. Passive income won't work. Social Security income does not meet earned income requirements. If grandma's supporting the grandchild and her only source of income is Social Security, will she qualify for earned income credit?
No.
No, because it's passive income. She has to have earned income. Basically what comes from working, either as self-employed or a job where she's working for someone else. Okay. So it's the same thing down here. We've got to have earned income. This is what they're asking about. So you go through all of your income. It's not your total income before you do adjustments. It's your earned income. So you add up all of your earned income. Basically, you're going to add up all of your W-2 income plus your self-employment income. You add that together, and then you run these tests. Then you go clear to your AGI and run these tests again to see if you still qualify. That make sense?
Thank God for computers.
Yeah. Yeah, it can be confusing, but it is important that you know this rule because there could be various types of questions. What I do not think for testing purposes, they're probably not going to require you to memorize these cutoff amounts. And if they give them to you, if they some reason wanted you to know those amounts, I think they're probably going to give it to you in the problem somehow. So, but they may test you to know if you know which information to pull off the tax return that's for earned income versus AGI. And you're going to have to do both of them. Do your earned income first, see if they qualify, then do your AGI and see if they qualify. Don't forget to do both of those. Okay?
Yes.
So far, so good?
Right.
Okay, so let's do a quick recap here. Step one, you've got to go through this miscellaneous, 6 different miscellaneous tests. You got to have earned income. You got to be a U.S. citizen or resident alien all year on the tax return. You must not be the dependent of someone else. Everyone on the tax return has to have valid Social Security numbers by the due date of the return. That does include extensions. No MFS, no foreign earned income exclusion. When you get through all of those, if you meet all of those, you can go to step 2. Step 2 is simply investment income test. $3,500 is your limit. What do you include in that? All your interest, taxable and non-taxable, ordinary dividends only, capital gains. Add all that together. If it's less than that amount, you qualify it under step 2. In step 3, you've got to find out if you have a qualifying child or not. How do you know if you got a qualifying child? That is somebody who is a qualifying child by definition, except for the S. So in other words, the general tests plus relationship, age, and residency. Or in other words, general tests plus RARs without the S. Okay? If you have a qualifying child, then you qualify. And then you can go to step 4. If you do not have a qualifying child, are you between ages 25 and 65? If you qualify with a qualifying child or because of your age without a qualifying child, then go to step 4 where you apply the income limits. Earned income, you have to apply the limits, then you apply it to the AGI. And if you qualify there, then you do qualify. At that point, you just figure it, calculate it. Okay. So far, does that make sense? Because those are the rules to qualify for it. Okay. So step 5, figuring the EIC. How do you figure it? Well, you do it in 2 steps. First of all, take the higher of the earned income credit or AGI. So again, just up here in step 4, we had to run the test separately. Now you want to take whichever one is higher. Earned income credit. Yeah, you can. Garrett wrote you can use tables in 1040 instructions. Yes, you would. But here's what you do. You take the higher of earned income credit or the AGI, whichever is higher, and then you look up that amount in the EIC table, and that's where you'd find those tables in the earned income credit, in the 1040 instructions, just like you said, Garrett. So you take the higher of earned income or AGI and you look that amount up in the EIC table. You can find the EIC table in the 1040 instructions. Okay. All right. Step 6, the maximum credit allowed for 2018. Do not memorize these. These are just for your information only. This really isn't even a step 6, to tell you the truth. This is just letting you know. If you no qualifying children, the maximum credit you can get is $519 on your return. That's it. If you have one qualifying child, the maximum is $3,461. 2 qualifying children, maximum credit is $5,716. Maximum credit for 3 or more qualifying children, $6,431. Now, when you use the EIC table that we talked about up here, it'll tell you what your actual credit is. But no, it'll never, for 2018, it'll never be higher than these amounts. That's all. This is more informational for you. This is not something to memorize. Okay? And there are phase-out amounts too. I should state this. These amounts here that we talked about here, these are cutoff amounts. That's where you get higher than that, you're getting none. But there are phase-out amounts where if you make more and more, you're going to, at some point, you're going to start getting less and less earned income credit till it phases out completely. Okay. But those are just the cutoff amounts, the high-level amount. And we've talked over and over again about phase-out amounts. So what do you do? Step 7, you enter the credit on Form 1040, line 17A. So everyone, go back to line 17A and just take a look at that. Just so you can see where it goes, line 17A. See that? The first one, 17A, see instructions. That's where you'd write that credit amount. Okay?
Yes.
And then take a look at that note at the bottom here. Note, only the custodial parent can take this credit. We talked about that, didn't we? Under the tests that we were talking about, these qualifying child tests. How a custodial parent can meet these tests for the EIC with the child, even though they're not claiming that child on their return. Okay, so before we go into some little practice problems and things like that, does anyone have any questions or want to discuss any of this? Because there it is. That's your earned income credit right there, all on one page. How do you guys feel about that? Good? Feel confident with that we could do some practice problems? Okay, Garrett says, yep. How about the rest of you?
Yes.
Okay. All right, so then this is what I want to do. Let's go through some of these now, okay? Give me just a second here. Okay, so we're going to go through some knowledge checks or practice problems. Who is not eligible to claim the earned income tax credit? A, B, C, or D? And I would like everyone to type in their answer for me, please, in the chat room.
Sorry, I cannot see. Okay, now I can see.
Okay. So who is not eligible to claim the earned income tax credit? Waiting for, oh, there you go. And just waiting for Amanda to put in her answer, and then we'll go. Amanda, are you still with us? Okay, well, we're going to move on. I don't have her answer, not sure why, but we're going to move on. So the answer is A. Okay, so let's go through the ones that are eligible. U.S. citizen who is retired and lives on retirement income, Social Security benefits, and earnings from a part-time job. Would that person qualify for earned income credit?
Yes.
And why is that? What makes them qualified?
Have earned income.
They earned income from part-time job. How about C, U.S. citizen who lives abroad for 4 months out of the year? Can that person potentially qualify?
Yes.
Yeah, sure they can. There's nothing in there that would disqualify them. They have to have lived in the U.S. for more than half the year. Well, the fact that they lived abroad for 4 months, we assume that we're in the U.S. the rest of the time. D, U.S. citizen who lives in the U.S. apart from their spouse and uses head of household filing status.
Yes.
Okay,
Why?
yes, I'm sorry, say that again. Somebody said something.
Yeah, I said why.
Okay, well, first of all, what is the rule? I think I know what rule is confusing you. I think I do. What is the rule about living with the dependent? Must have lived with you in the U.S. for more than half the year. There's nothing in here that says that this person lived apart from their dependent for more than half the year. They just said they lived apart from the spouse for more than half the year.
Mm-hmm.
And as a result, they're able to use head of household filing status. That's why. Does that make sense?
Yes.
Yeah, that's all. I think you were reading that as dependent.
Right.
Yeah. So a taxpayer filing a joint return who does not have a valid Social Security number. Remember that rule? Must have, everyone on the return must have valid Social Security number. And the spouse did not in that case. That's what disqualified them. Okay, let's go to the next one. Otto and Grace are married filing a joint return. Otto works as a glass blower and Grace is a homemaker. Both are U.S. citizens with valid Social Security numbers. Otto's W-2 Box 1 shows $18,000 in wages, but they have no other income and no adjustments to income. They do not file Form 2555 or 2555EZ. Let me stop for a second for those of you who don't know. Form 2555 is the form that you do for foreign earned income exclusion. Okay, remember that's one of the rules, no foreign earned income exclusion. That's why it's giving you that. So they do not file Form 2555, which is true concerning their earned income tax credit. And go ahead and type in your answer. Thank you, Tammy. Thank you, Sheila.
Sorry, I cannot see yet.
Tina. Has it come through yet, Noemi?
No.
Okay. Well,
Yeah.
So
okay, now only.
Just came through. I'm going to give you just a few extra seconds to read that through and give me your answer then, okay?
Huh? Okay.
Yeah, you guys all got it right. Otto and Grace meet the EITC rules for all taxpayers. All of you got that right. Good job. Okay, next one. Which type of income is not considered earned income for claiming the earned income tax credit? A is alimony, B is net earnings from self-employment, 3 is tips, 4 is wages. So which one of those is not earned income for that? And then, Noemi, you can give me your answer verbally.
Alimony.
Yep, you guys are right. You all had the right answer. Alimony. That's passive income, not earned income. All right, here's the next one. Portia is 67 years old. She's been diagnosed with a terminal illness and is too ill to work. She is considered permanently and totally disabled. She is single and lives in the U.S. all year with her brother, Abe, who is 60 years old. Which of the following tests does Portia meet to be Abe's qualifying child for the earned income tax credit? So remember the test to have a qualifying child. And I'm not reading this one to you, Noemi, because it's actually it's too confusing to read this one. So okay, I think everyone has an answer in there. Am I missing someone's? Tina, I think I'm still waiting for yours.
Oh, I'm confused of the age. They are right, see.
I don't think Tina's with us.
Tina, can you hear me?
I can hear you.
Okay. No, Tina. Oh, there's her answer. Okay.
Oh, yeah.
No. For a second, Garrett thought we lost you. Okay. All right. So here's the answer, but we're going to explain why it is. First of all, remember, what are the rules once you get to that third step? What are the rules? You got to find out if you have a qualifying child or not. How do you know if you got a qualifying child? Somebody explain in whatever way you want, what are the rules for a qualifying child for EIC?
Relationship test. Is it a qualifying child or sibling? In this case, it's a sibling. Age, is it under 19 or under 24? She doesn't qualify for that, but she's permanently totally disabled. So she's over 60, but she's totally disabled, so that qualifies. Residency, she lived with him in the U.S. all year, and then they're not filing a joint return because they're not married.
Okay, so you're correct. Let me tie it in with the way I taught it to you guys, though, because this is important. That's okay. Remember, qualifying child for purposes of EIC, it has to be a qualifying child by definition, except for the S. By definition means they have to meet the 3 general dependency tests. What is one of the general dependency tests? It's the joint return test. It says the dependent is not filing a joint return. So that's the one place, Garrett, where you got to be careful. That wasn't asking whether or not the 2 of them were filing a joint return. It's asking whether or not the general dependency tests were met.
Okay.
This wasn't every test they had to pass. There were other tests that they had to pass too, but of the group, this is the only one that had them all correct. So what are the 3 general tests? Dogs jump creeks, dependent taxpayer test, joint return test, citizens or residence test. Portia met all of those. And the part of the general test that she met that's listed here is that joint return test. She's single. She was not filing a joint return with anyone. Then we go into the qualifying child tests. RARS, R-A-R-S. But for EIC, we only need RARS without the S, so relationship, age, and residency, and you perfectly explained why she qualified with those. Okay? Does that make sense to everyone? Okay. Let's go on to the next one. Helen is 23 years old. She is a single full-time student and has 2 twin sons. Well, obviously 2. They're twins. Twin sons, Adam 2 and Everett 2. They lived in the U.S. all year with Helen's father, Marlon, who's 50 years old. Helen has a part-time job as a waitress, which is not true. So read through the list there and give me your answer. Which one is not true? And Noemi, is yours coming through yet so you can see it?
Yes, I can see it now.
Excellent. So again, which one is not true?
Not true.
Waiting for a couple more answers in there. Okay, I think I have everyone's. Oh, I'm sorry. I didn't have yours yet, Noemi, did I?
A.
Oh, okay, so the answer is D.
D.
Okay, so Sheila, you had the right answer. Could you unmute yourself and tell us, kind of walk us through why these are good, why this is the right answer?
Okay, so which is not true. Adam and Everett are Helen's qualifying children for the EITC. Well, they're not her qualifying children. They're her father's qualifying children, I think.
Yeah, remember one of the requirements, that's right. Remember one of the requirements for EIC is must have lived with you in the U.S. more than half the year.
Mm-hmm.
They lived in the U.S. all year with Helen's father. See that?
Mm-hmm. Right.
That's the reason Adam and Everett, Helen cannot claim Adam and Everett on her tax return for EIC purposes. Who can claim Adam and Everett for EIC?
Marlon.
Marlon, right. So Adam is Marlon's qualifying child. That's why that is true. Helen is Marlon's qualifying child. That's why that is true. Excuse me. Yeah, that's true. And then Everett is Marlon's qualifying child. So that's the reason why. Okay. And by the way, Tammy, I see that I'm sorry I missed your question on the last example, but it looks like you figured it out. Am I right? Regarding Portia? Okay, great. Okay, so let's go on with the next one. Ralph's daughter, Opal, is 18 years old. She lived with him in the U.S. all year long. Opal's mother, Judy, did not live with them at any time. Opal dropped out of high school in February of the tax year. She does not work, and Ralph provides all of her support. Ralph agreed to let Judy claim Opal and gave her a signed 8332, which is a revocation of release of claim to exemption for child by custodial parent, which is true based on using Opal as a qualifying child. I'm going to let you guys work with that. There's a lot of words there. I'm just going to be quiet and let you read that through and come up with an answer for us. Thank you, Tammy. Thank you, Tina.
Yeah. See.
Thank you, Amanda. The answer is C. Okay, so Amanda, do you have audio? Are you able to unmute for a second?
I am sorry, but I was gone for a second.
It's okay. It's okay. So could you tell us why that is the correct answer?
Let's see here. Because Opal lived with him all year. He can claim the EITC. And because he agreed to let Judy claim giving the Form 8332, she can claim the dependent exemption.
That's right. That's right. So in other words, remember the rule for divorced and separated parents. One person can get the dependents on their return, but the EIC, it still goes to the custodial parent.
Okay, I'm going to interject here.
Yes.
Opal's 18. As of
Yep.
2018, my recollection is you can only get EITC for somebody 17 and younger. And 2, she dropped out of school halfway through the year.
No.
And so she wouldn't qualify as a student being over 18.
Okay.
And so
Okay.
that's
So
why
let me address both of those. First of all, there is no such rule for EIC regarding 17. You're thinking child tax credit. Okay.
Okay.
Yeah.
I thought it was EITC. It had to be 17.
No, child tax credit, not EIC. You can have somebody in college that you're claiming EIC for. Second of all, it's under age 19, not under age 18. So that's what you got to remember too. So it's got one of those two things that provided the confusion for you. The rule is for a dependent, qualifying child is under age 19 or a full-time student under age 24. And the fact that she
pretty sure that this is the last year. Last year, 2018 was the last year I could claim my daughter because she was 17. Now she's 18. I can't claim her anymore.
For child tax credit. For child
For
tax
the child
credit.
tax credit, right?
Yeah. For child tax credit.
Okay.
Yeah. That's okay, Garrett. I mean, I'd rather you ask the question so we get everything. And besides that, I've learned a long time ago, if one person's confused about it, so is someone else. So,
well, that was the reason I put none. Otherwise, I'd have put C, but it was because of the school thing.
Yeah.
I was like, nah.
That's okay. That's okay. So don't. Right, I get it. So just remember, what are the rules for earned income credit? Qualifying child, by definition, except the S on RARS is the only exception to that. Otherwise, the exact same rules for claiming a qualifying child on your return apply to EIC, except for the S in RARS.
Okay.
That's it. So as long as they meet the requirement, you're good. And being 17 or younger is not part of it. That has to do with child tax credit.
Okay.
Okay.
Yep.
All right. So Sue is 44, is a clerk, and has 2 children. Her daughter Lily is 16. They lived with her all year in the U.S. Her son Hank, 18, is not a student and lived with his grandma Amy, 70, in the U.S. all year. Hank and Lily do not provide more than half their own support. So which of these is true? Oops. All right. Thank you, Garrett and Sheila. Amanda, good. Tina. And just waiting for, oh wait, Noemi did it. I guess I got everyone's. You guys are right. A, Lily is Sue's EITC qualifying child. Good job. All right. So Lana is 37, is adopting Malik, who's 8 months old at the end of the tax year. They lived together in the U.S. since his birth. Malik has an ATIN because Lana could not get a Social Security number for him before filing her return. Lana's only income is wages of $32,805, and she provided more than half of Malik's support. He qualifies as her dependent. Is Malik a qualifying child for EIC? Yes or no?
No.
Okay, so
Malik
why is
has
it
an
no is the correct answer. Why is it?
Malik have not valid SSN.
That's right. The reason it doesn't count is that, remember, everyone on the tax return has to have a valid Social Security number, period. There's no exception to that by the time they file the return. And Amanda asked the question, does adopted relationship count? The relationship is fine, Amanda. So an adopted person would count. That's why you can put that person, why in this example, Lana could claim Malik on her tax return, but she was disqualified from claiming earned income credit with Malik because she did not have a Social Security number for Malik. Cool. Okay. All right, so here's another one. Michelle is 27, a full-time student, and earned $5,000 from her part-time job. She lived alone in the U.S. and provided more than half of her own support. Michelle has a son who lived with her father. Which statement is true? A, B, C, or D?
D.
Okay, I think I have everyone's answer. If I miss somebody, I apologize. The answer is D, as in dog. So, why is A not the correct answer? Somebody tell me why A is not the correct answer. Nobody knows why?
You can claim the EITC if you have a child.
Yeah, that's right. Why is B, as in boy, not the right answer?
You can claim it if you are a full-time student.
Yes, that's right. There's no rule in there that says you cannot claim it if you're a full-time student. Where did we run into a rule where if you were a full-time student, you couldn't claim a credit? Which credit was that?
Child tax credit.
No, not that one.
No.
Savers credit. That's right, Tammy. Tammy wrote up the answer. The savers credit. Remember that?
That's
if you were a
yeah.
full-time student, you could not do the savers credit. That's all. So those of you that missed it because of that, that's why you're getting it confused. There's no rule. Literally, guys, take that sheet I gave you. Those are the literal rules. Don't add anything to it that's not there. Okay? All right. Jeff and Mallory, 24 and 26 years old, are married filing joint return. They have no qualifying children and they lived in the U.S. all year. They meet the earned income tax credit rules for all taxpayers. Jeff earns $6,000 as a waiter, Mallory $7,000 as a clerk. They have no other income. Which statement is correct?
I'm sorry.
Okay, thank you, Tina. Noemi?
They're on their way. Yeah. Hello? I have no idea, but he left his phone, damn it. I'm sorry. Hopefully he knows what he's up to. I don't know. He's got the kids with him. Okay, bye.
Okay.
Okay, so here's the correct answer. Jeff and Mallory meet all the rules for taxpayers without a qualifying child. So some of you answered A, okay? I'm not sure why you chose A. I'm trying to think of what was confusing you, because Jeff and Mallory, they're married filing jointly. They're both between.
The age thing.
The age
Where it
thing.
sometimes.
Oh,
Because
click.
Jeff
One of
is
the-
Right.
24.
So,
Yeah.
so I can't.
That
First of
almost
all,
got me
go ahead. Go ahead. What were you going to say, Amanda?
No, it almost got me too, because I was thinking about that first too. I thought it was going to be one of those.
I got you. No, I got you. It just thank you for pointing it out. So here's the thing. If you can claim a child, excuse me, you can claim earned income credit if you have a child, or if you don't have a child, if you're between what ages?
25.
25 and
25
65.
and
25 and 65. That's right. If you're between 25 and 65 and you're married, what's the rule?
Either spouse.
Either spouse. That's what confused you guys.
Oh.
So either spouse, that's all it takes is one of you to be within the correct age range, and you both qualify since you're married filing jointly. All right. So those of you that missed that, does that help clarify?
Yeah.
Okay. All right. But that's all. Either spouse has to meet that requirement. All right. So we're done with some of those questions. Let's talk due diligence again. How many times have we talked due diligence over and over again about credits and various things? Regularly, right? Common errors when that you make when putting EITC together on a return. Common errors. We're just going to go over some and talk a little bit about what your due diligence requirements are. Claiming a child who's not a qualifying child for EIC. That's why you have my definition of what a qualifying child is. Remember, qualifying child for EIC is a person who is a qualifying child by definition to be on a return as a dependent, except RARs without the S. That's the only exception to that. Or another one when claiming EIC, incorrectly filing head of household. Did you know somebody might not be head of household, but could still claim earned income credit? Remember, the rules for head of household are different than the rules for claiming earned income credit. Head of household, among other things, you had to have provided more than half the cost of supporting the household. There are situations where you might be living with somebody else and you and your child are living with somebody else and you're not paying more than half the cost of the head of supporting the household, but you can still claim earned income tax credit. The next one is reporting income and expenses incorrectly, and that's just reporting the wrong amounts or using incorrect Social Security numbers. So those are just common errors, okay? And if an error is made, it can slow down or even cause the IRS to deny EIC. So you've got to use due diligence. When asking questions of a client, you've got to ask the right questions and you've got to document your answers. What are the right questions? The right questions are the ones that show that you qualify for earned income credit or your client qualifies for earned income credit. So ask the questions that are relevant. How do you know what those questions are? They're on that sheet that I just gave you. The information is on the sheet, not the actual questions. You ask them those things, find out what's accurate, what's not, and go through it and then document it. Okay? So that's what this is saying. You must ask the questions to ensure that the taxpayer or your client meets the qualifications for claiming EIC. And then if something appears amiss or not clear, you need to dig deeper and ask even more questions. And then you need to make sure your client understands what you're asking. So you cannot just repeat stuff right out of the Pub 17. You cannot repeat stuff the way the IRS, says it. Because look, that is IRS technobabble. That is tax law babble. They're not going to understand that. If you say, "Are you head of household," for example, that has a technical meaning. You can't just ask them that. You got to ask the questions in a way that they understand it, go through the test. Same thing with earned income credit. You got to ask them, "Do you have a qualifying child?" You don't ask that. You just say, "Do you have a child?" And then you go into the rules and make sure that child qualifies. Okay? And then, and this is why it's in red, they must be captured in notes that's kept as the part of the tax preparer's files. Well, working for us, we have a place to actually take notes that's going to be saved with the tax return. Okay? So that's what's required of you for due diligence. So let's look at an example. Sandra is a paid preparer. While preparing Jimmy's tax return, she determines his eligibility for and the amount of the child tax credit claimed on his return using his dependent, Remia, as his qualifying child. However, Sandra does not file Jimmy's return because he is missing some information. Helena is a paid tax preparer in the same office as Sandra. Helena is available when Jimmy returns with the information, but he did not have when Sandra was working on his return. Nothing changed in the child tax credit, but Helena determines Jimmy's eligibility for an amount of EIC when claiming on his return for Remia. Okay, look, guys, this is a lot of words. I hate it when they make it this long. All they're saying is preparer 1 started the return, didn't have all the info. Preparer 2 finished a return for the same client. They both are going to have to complete this form 8867, which we've looked at before. That's all they're saying. So if 2 people work on a return and they each deal with something different, they both need to do a form 8867. Okay, so 8867 looks like this here. And we've looked at this before where it has a bunch of questions. Notice on here you have 3 columns. Actually, you have 4 columns now. This is the 2017 version. There's for earned income credit, child tax credit, American Opportunity Credit. There's also one now for head of household where you answer some general questions and then you go to specific sections of it to answer questions for specifically EIC. So as you can see on this one, 9A, specifically for EIC, says, have you determined this taxpayer is in fact eligible to claim EIC? You have to mark yes. Did you explain to the taxpayer that he or she may not claim the EIC if the taxpayer has not lived with the child over half the year? Mark it yes. Did you explain the taxpayer about the rules about claiming EIC when a child is a qualifying child of more than one qualifying person? Yes. So those are specific questions having to do with EIC. Then there's also specific ones for child tax credit, which we briefly touched on when we talked about child tax credit. There's specific ones for American Opportunity Credit. Okay, so we've seen this before. The point is due diligence is very important. It's important that you clarify anything and everything. EIC is the biggest abused, most widely abused tax credit that exists. Okay, IRS watches this very carefully. They randomly audit tax returns that are filed. They also randomly audit preparers' notes. That means that if you were to get audited, you'd get a letter, or the company, our company, would get a letter and saying, okay, let's see the notes on this. Let's see what you've done to do for this client, or for this preparer. What notes did she use and take, and what questions did she ask? It's really important. Okay. So ask the questions. It's important to know that as a preparer, you cannot have reason to know the information is incorrect or incomplete. So if you know somebody personally, it's not good enough that you didn't ask the question. You've got to know it, and if you do know something is incorrect or incomplete, you still got to ask the questions. Make reasonable inquiries when the information is inconsistent or incomplete, and then record your questions and responses in your notes. I'm not going to go into the example. I think it's pretty obvious what we're talking about. So this is why it's important. There's a penalty of how much for each occurrence where you failed. $510. And that's only what you as a preparer pay if you don't use due diligence. Now, don't freak out over this. I've had some preparers, they get so nervous they've actually resigned from being preparers. They're so nervous about these penalties. Guys, just use basic due diligence. It's not that hard. Know what the rules are and ask the questions. You know, and what questions do you ask? You use my little sheet if you've got to, but you look at it and make sure you're asking questions to make sure every detail is covered. And then just type in your notes as to if they met the requirements. Okay? So here's 8867, a paid preparer's due diligence checklist that's filled out. You can see that on this example, they're claiming earned income credit and child tax credit. There's some general questions, and notice they answered yes to the ones that needed to be answered. This number 4 answered no, but that's because it says, does anything here appear to be incorrect or incomplete or inconsistent? No, it looked right. Did you satisfy a record retention requirement? Yes. Did the taxpayer document the eligibility for this? Yes. Did you ask the taxpayer if any of these credits have ever been disallowed? Yes. Okay. And then on page 2, you'd get into the specific questions for each one of these. And now, if an EIC, we've touched on this last session too, if with the other credits, the education credit, if a credit has ever been reduced for a reason other than a math error or clerical error, then that person can be disallowed from claiming it in future years, and they might have to in following years do a form 8862, which is a special form where they have to give more information to be able to claim it in following years. And that's all I'm worried about there. If EIC was denied for, remember, recklessness or intentional disregard, they cannot claim it for 2 years. If it was due to fraud, they can't claim it for 10 years. Guys, this is the same amount as for the education credits. Remember that? 2 years and 10 years. Recklessness is 2 years. Fraud is 10 years. They can't claim it for that long. That's really serious. You don't want to do that to your client. So make sure you're asking the right questions. So Tamarin claimed the EIC on her 2016 return. The IRS denied the EIC when her return was filed because she had an error due to fraud. Tamarin cannot claim the EIC for the next 10 years, years 2017 through 2026. To claim the EIC on her 2027 return, she must then complete that extra form with additional information and return it for that year. So here's a question. Under which circumstance is Form 8862 required to be filed with the taxpayer's return? That includes an EIC claim. A, B, C, or D? Okay, I think I have everyone. The answer is C. The taxpayer claimed a child who was not a qualifying child and the IRS denied the claim. So if the taxpayer incorrectly reported an incorrect Social Security number, they put the wrong Social Security number, is that fraud or recklessness? No. So they're not going to necessarily, that's more a clerical error. So they don't have to do an 8862. The taxpayer miscalculated the amount of EIC. That's a math error, so they don't have to do an 8862. The taxpayer filed 8862 last year and the EIC was allowed. Well, if it's been allowed and they already took care of filing one of these, they don't have to. It's only when it's been, the IRS has denied a claim, that's when they have to do it. Does that make sense? All right, one more question here. Suzette claimed the EIC on her 2017 return. The IRS denied her EIC in 2018 when her return was filed because she had an error due to recklessness or intentional disregard of the rules. What is the next tax year Susan is allowed to claim the EIC? So what's the very next year that she can claim EIC? 2019, 2020, 2021, or 2028? Okay, how many years? We have answers all over the place. So recklessness and intentional disregard is how many years? I just want you to speak up.
2 years.
2 years.
2 years, yeah.
Fraud is how many years?
10 years.
10 years.
Okay, so is this fraud or recklessness in this example?
Reckless.
Reckless.
So how many years are they going to be disqualified?
2
2
years.
2 years.
2 years. So which years are they disqualified?
2017 and 2018.
Well, she already did her
Oh, she-
2017 return.
Yeah,
So,
so she was
So she
was
denied in
denied.
20.
Denied in 2018.
right. So it was, right. They did the
okay.
tax return. And remember, the tax return is done in the following year. So they did it in 2018 for 2017. There was fraud. So she's told she cannot do it for the next 2 years. So she cannot do it for 2018 and 2019. That means the first year she qualifies for is 2020.
Oh, okay.
Okay.
You see how we get that? So in the year that it's disqualified, it's the next 2 years
2
for
years.
recklessness, or next 10 years for fraud. So you do it that way, and then it's the following year after those disqualified years that they could do it. Okay. So before we go any further with this, are there any questions about earned income credit? Because we have finished earned income credit. The sheet that I gave you, this is why I think you ought to print it out and literally memorize the first few steps. The first few steps are the most critical for keeping this straight. Steps 1, 2, and 3. If you can keep those things straight, the rest of it is fairly easy. Okay? Because you're going to mostly get tested on steps 1 through 3, but you got to keep straight the test. Here's the problem with this. This is very intensive. You got to get all of those right. So this is the part that you ought to memorize, steps 1 through 3. If you get those memorized, that's really mostly what you need to know to make sure you can pass EIC questions and get it right in real life as well. Okay, so I want to give you a chance to ask any questions or make any comments on that. Have I missed covering something regarding EIC that you want to discuss? Everyone's pretty good with that?
Yeah, can you give us a copy of the presentation?
I gave you a copy. This is it. Is that what you're talking about? This here? Or
No, the PowerPoint presentation.
oh, sure. Let me send that out right now.
So are the meetings still being put up on YouTube?
Yeah, they're supposed to still be put up on YouTube.
They're just not there.
It's still just the first couple, like the first week.
Yeah.
The 621.
No,
that's it. So
there's
I'm pretty
more than
behind.
that. All right, so Amanda, there's more there. So there's 2 different places. The website's a little confusing. Give me just a second. I'll come back to that, Amanda. I'll show you, okay?
I
Give me
checked the
just a second.
website yesterday and there's still the same 6 there.
Yeah, I checked the website and YouTube.
That's why I always request.
All right. Hold on a second, guys. One thing at a time. I'm not getting everything done for you right. Okay, so let me get out what I promised just now, and then I'll deal with that. So I am uploading right now the PowerPoint that we just went through with the questions. Okay. Okay, so first of all now, that has been uploaded. Can everyone see that PowerPoint?
Yes, got it.
Okay.
Okay, thank you.
Yeah, no problem. Okay, so now looking on the screen, I called up the website. So there's two places to go for this. One of them is on the landing page. You can come down here. I'm just scrolling down toward the bottom and it says view recordings of our classes. If you click on that one, it brings you to YouTube where it has those here. So you're talking about the fact that we only have the first 6. Am I correct? Is that what you're asking about, Amanda?
Yeah, that's me too. So.
Okay. Okay. And Tina too. Okay.
Yeah.
Guys, I'll have to ask Ryan about it. I thought he'd have these up by now. So let me check. Okay.
Okay.
So what I want to warn you is eventually, going back to the landing page, eventually it's all going to be put under the support tab. Under support, I'm going to click there. And then you'll notice the EA Ltc course. You would click on that. And then course videos. Then you click on that. And eventually they'll be there. But notice this, he was trying to change something to make it more user-friendly, and it's going to get there. But notice those are missing from there. So what we want you to use is we want you to use these here. So on the landing page.
Okay.
Okay. So, all right. So we'll try to get that updated. Okay. So guys, everybody pull out your Form 1040 again. Let's look at line 17A.
Oh, you're good.
Okay. Line 17A is where you report which credit.
Earned income credit.
Okay.
That's right. Line 17B is where you report what?
Schedule 8812.
Which is what?
Ew.
We've already talked about this, guys. We talked about it a few sessions ago. What is Form 8812 for? Which credit is that?
Question.
Yes.
Retirement?
Nope. What credits do we have that we talked about that were both so far that were both non-refundable and some of it refundable?
AOTC.
AOTC is one of them. That's not the one this is. Child tax credit. There you go, Amanda. That's the additional child tax credit. So
Okay.
line 17B, 8812, that's for the additional child tax credit. So like I said, we've talked about this already. We talked about child tax credit, and then we talked about additional child tax credit. And where do you report it? You report additional child tax credit on line 17B. All right. Line 17C, what's reported on line 17C?
8863.
That's right. And what is that for? And we have talked about this too. We talked about it last session. What did we talk about last session?
Savers credit. wasn't it?
Education credits.
Yeah, it's actually we did talk about savers credit, but that's not what this is. You're correct. We did. The 8863 is your education credits. That's where you report your education credits, and which education credit can be both refundable, non-refundable, and part of it refundable.
AOTC.
AOTC. So line 17A is for what?
Refundable credits.
No, well, that's true, but 17A is for which refundable credit?
EIC.
Credit.
Line 17B is for which refundable credit?
8812.
Additional tax credit.
That's right, additional child tax credit,
Child
or
tax
AOTC. Line 17C is for which refundable credit?
Educational credit.
Specifically, which one, Sheila?
AOTC.
AOTC.
That's right, AOTC. So you would add all that together plus any other refundable credits that you get from Schedule 5. So everyone jump over to Schedule 5.
Yes.
Okay, look, everyone there?
Other payments and refundable credits.
That's right. That's the name of it. So if you look on line 66, there's 2018 estimated tax payments and amount applied from 2017 return. So obviously, if you're, say you're running your own business and you had a little bit of a refund on your 2017 return and you applied it. So let's say you had a $500 refund on your 2017 return. You chose to have it applied to your 2018 taxes. So they basically kept it and you treated it as a prepayment of your taxes. That's what they're talking about. They're also talking about estimated tax payments where you send in quarterly payments. Every 3 months you're sending in a payment. So you'd get credit for those payments right there on line 66. And then what do we see on line 70?
Net premium tax credit.
Net premium tax credit. That's right. That's a refundable credit. Have we talked about that yet?
Not yet.
Not yet. That's coming next session. Just to let you know, we're going to talk about that next session. Net premium tax credit has to do with the Affordable Care Act, aka Obamacare, and all of those rules. So we're going to talk about that next session. Look at line 71, amount paid with request for an extension. So if you filed an extension on, say, for the 2018 return, and you paid some because you knew you'd owe some, you paid it on there, you'd get credit for it by putting it right on line 71. Line 72, excess Social Security tax. That's where the wrong amount was, too much was withheld from your Social Security tax. You can claim that on there if it's too much was withheld. Don't want you to get into this too much. I'm going to give you some information. This is probably all I'm going to talk about it, though. Excess Social Security tax. If it's all withheld, if all your excess is withheld from one employer, you get the employer to correct it. If it's withheld because it was withheld from 2 or more employers, you take the credit on the tax return. Okay? Because what's the limit? How much, what percentage is supposed to be taken for Social Security tax?
6.
6 point.
What? Finish it. Finish what you were saying.
6.2.
6.2%. That's right. 6.2%. So if more than that was withheld, or they kept withholding after you got to that maximum amount in a year, because there's that maximum amount, which I don't remember. It changes every year, but there's a certain amount where you hit a dollar limit of income, and any more you earn is not going to be subject to Social Security tax. So there is circumstances where you might have too much withheld and you use that. What is the Tier 1 RRTA tax withheld? What are they talking about there on line 72?
Railroad retirement tax.
That's right. That is the railroad Social Security equivalent. Railroad people don't actually pay into Social Security. They pay into their equivalent of Social Security, which is that. Okay. 73 is certain credits on, for certain credit for certain taxes on fuels. There's 74 is miscellaneous other amounts. So on line 75, you simply add up all of the refundable credits and payments that are showing up on Schedule 5. You add it all together on line 75. And where do you report that amount?
Line 1040, line 17.
That's right, line 17. So you would actually take all the amounts on Schedule 5 plus the amounts of from 17A plus B plus C plus the amounts in line on from Schedule 5. All your refundable credits go right there. Everyone see that? See how that works?
Yes.
Yeah, okay. All right. So that was just the big overview of that. So we are actually going to be finished for today. And I just want to talk about next session. Next session, we're going to cover the Obamacare, the Affordable Care Act. We're going to talk both about the premiums, the penalties, and then the credit that you can potentially get there. And we're also going to talk about some other miscellaneous taxes and payments. In fact, we've touched on them already today, and we've touched on some as we've gone through. That's sort of a catch-all. Just to let you know, when we finish the Affordable Care Act, we're going to jump into taxes and payments. But again, that's kind of a catch-all of miscellaneous stuff. Some of it we've touched on, some of it we haven't. But it's just covering some other things that we need, that you guys need to know. So what chapters do you need to read and make sure you're ready for it? Chapters 15 and 16 in your reading. So 15 and 16. Okay?
Yes.
All right. So does anyone have any questions or any comments or anything you want to bring up before we call it a day?
Is the picnic this weekend?
The picnic is, no, the following weekend. Let me double check that. Yeah, it's either the 19th if you're down in the Willamette Valley, or the 20th if you're in the greater Portland area. Yeah, no problem. Anything else? All right, everyone. We are done for the day. Thank you so much. We'll see you later.
Thank you.
Bye.
Bye-bye.
I just wanted to ask about the videos one more time. Are we going to get those up? I know I've kind of been hassling you about it, but
No, you go right ahead and hassle us about it. Is that Amanda that's
listen.
speaking?
Yeah, that's Amanda.
yes, it is.
Yeah,
Sorry, my mic
actually,
kept-
Ryan, are you on here listening right now? Did you ever get back from your phone call?
I haven't heard him. I haven't seen him.
That's okay. Give me just a second. Let me try to reach out to him, okay?
Okay.
Mhm.
I'm going to mute you guys for a second while I do this, all right?
Okay.
No problem.
Okay, so I'm back. I just got a hold of him. He said he was going to stop the recording here and try to jump on here. He's doing double duty. He had to take a phone call and deal with something.
No problem. I understand. And I understand life's complicated.